Okay, hello everyone. So hope you can see my screen and, and hear my voice. Can anybody please confirm? Okay, great.
Yes, we can see.
We can hear you.
Okay, great. So
Good evening.
once again, welcome everyone for this second session on stock market. So today we will cover, I will cover few more basic terminologies about the stock market. And it is very important to know, as we were discussing yesterday, those basics before we get to know more. All right. So what we are going to cover is a few topics that I mentioned in my invite, that is some basic about the technical analysis. Okay. So what is basically a technical analysis, right? So technical analysis primarily refers to uh, I can say that it studies the historical market data, which includes price and the volume. When I say price, means what is the price of individual share, price or cost. At the same time, volume means how many investor or trader are interested on that particular time frame. So time frame could be again daily, uh, hourly, or so on and so forth. And these are the two primary aspects on which the entire technical analysis is based on. At the same time, using the details of the other term, okay, which is not directly associated. I mean, not directly, but those other terms are indirectly reflected into the price and the volume both. That cause, I mean, one aspect is called market psychology. So market psychology means sometimes it is like a feeling that, okay, something of the price is going to get very high. Okay, so maybe sometime back, like not sometime, couple of year back, there was some market psychology on the precious metals, right? The gold or silver. Okay, and the other factors like the behavior economics, right? And plus quantitative, like some things, quantity is getting maybe reduced, okay, or the scarcity. So these are the few of the terms which impacts the overall market psychology, and based on that, the price action or the charts are getting, I mean, those psychologies, market psychologies, are getting indirectly reflected into the charts, right? And again, considering the past performance and all those other factors, anyone can, an analyst can predict the future of the market, right? So the two other form of the technical analysis, that is called a chart pattern and the indicators. So chart pattern means that, okay, normally you will see on the any stock chart. So there are chart is not always any linear or any uh, one way of representation. It's always keep on varying. At the same time, once anyone look at the historical data of the chart, maybe a monthly view or the or weekly or daily view in a longer time frame, any chart gives some kind of patterns. Okay, these are the various patterns that we will be talking about in future coming sessions. And those charts called head and shoulder, flag and pole, um, a double top, double bottom, inverted flag and like inverted a head and shoulder. So these are the different kind of the combination of the chart. Analysts give the some names, right? So based on the chart patterns, uh, any technical analyst is going to predict that, okay, what will be the future behavior of that particular chart or that particular script. Second part of the technical analysis is called indicators. So along with the indicators, there are certain mathematical formula applies, again, that is again based on the price and the volume, and based on that also the trading happens, right? So as a trader or an investor, we don't need to learn, okay, how those mathematical calculations are getting calculated. We only need to know that, okay, how to use them. So those indicators are inbuilt, when we start using the investing.com or the trading view. So there are those indicators are already inbuilt into these two platforms, and we are going to just learn how to use them. Okay, mathematical form, knowing the mathematical formula behind that is not necessary. Other parts of the technical analysis is that it is it is going to help us to predict the future price movement. It could be, and the price could be only two forms: either it is going to up or down, or maybe sometime in a sideways, and within the sideways also it is a up and down only. So primarily there are only two movement: either price is going to up or down. Okay, at the same time, that these various tools, right, that we will be again discussing in futures, will help us to how to identify the appropriate time for entry. When we are saying entry means either buying or selling, or the exit. Exit means if we have purchased it, exit means this sell, and if you have already sold it by via short setting, then that means exit. So in okay, so these tools and analysis are going to help us to identify the right time for the entry and exit so that we can make profit. Okay, and there is some underlying assumptions. Okay, so what is underlying assumption is that whatever the information available, which is okay, each and every chart shows those information directly or indirectly. Okay, so again, depending on whatever is happening within the company, whatever is the market psychology, whatever is the demand and supply, everything reflects into the chart, and that is chart in the form of price action. Okay, so right, in this example, if you look at that, okay, if somebody, this is the Tata Consultancy TCS chart. So uh, I mean, ideally looking at, okay, if somebody maybe could have purchased the stock here and they got exited here, they may, there's a I mean, they could have made a very good profit. The only thing is how we know that, okay, when to enter and when to exit. So overall technical analysis uh, help us to understand, and this is what we are going to learn as part of the technical analysis, that okay, when to enter into the market, and when to exit from the market. Please stop me if you have any question in between. Going going further, so there are some more, you know some more points we need to know about the technical analysis. Okay, so overall, a technical analysis means that there are a variety of strategies that depend on interpretation of the market uh, price action of any stock. Okay, and at the same time, there are many technical analysts, maybe people like you and me, who are into the stock market from many years. So they focus uh, on the trend basically. So when we say trend, means that the price action, it is going, price is going up or price is going down. So suppose if the price is going up, they try to predict when that trend is going to end, right? So in the uptrend market, trend ending means, okay, it is not going further. At the same time, it is not going further means sometime it stays at the similar price for a quite some time, and after some time, it probably it takes some risks, and then market reverse also. So as a technical analyst, we need to know, and we need to understand that, okay, what are the various indicators through which we should able to identify that, okay, what is the market trend, and whenever the trend is going to end, or it is trend is going to reverse from there. So these are the maybe two things: trend trend continuation and a trend reversal. Okay, at the same time, there are many technical analyst we who also follows a kind of a trend line. So when we say trend line means that uh, a price is going up and up. So depending on the historical data, it is also possible to know that okay, in between where there is a possibility that that trend will stop, and maybe in between also from there the trend is going to reverse. Okay, so they are, I mean, there are various way that individual trader, I mean, we are going to learn all kind of technical analysis, but again, what are as an individual trader or investor, which technical analysis part or what kind of indicator that is going to help you as an individual, we need to decide. Okay, it's like there are many cars in the market, but based on our requirement, our need, we are going to select one. Similarly, in the stock market also, I mean, there is a stock selections are there. At the same time, there are various tools and maybe combination of few tools based on our individual learnings and need we are going to adopt. From the learning perspective, we will be learning all. Okay. So trend line, and at the same time, there are many technical analysts who follows the candlestick formation. So yesterday we just saw the quick example about the candlestick formation. So there are many analysts who, but just by looking at the candlestick pattern or the just like one candlestick, they are also going to do their trading or investing. So if you look at these candles, the red and green one, they are not uh, similar uh, in a nature or in the shape. Okay, even the red candles, if you say some candles are bigger, some are smaller, some candles have the wicks down or up, and some candles are really big. Okay, so each and every candle type, okay, small or big, or having the smaller wicks or bigger wicks, they represents a certain behavior, and based on looking at the candle also, you can able to take a trade. Okay, uh, at the same time, there are some more indicators are used, that is called the maybe sometime band, sometime boxes. Okay, so these are created based on certain mathematical calculation, and which we can directly apply on top of the chart to understand or to predict the future market uh, scenario. Uh, so as I was mentioning that, okay, many of the technical analysts uh, combines the either the chart pattern or indicators or box or band, and with the combination of multiple um, factors, we are going to take a trade, because I mean, add learning and adding more and more technical indicators, it gives a more confidence to us to get a proper trade. It's like in a car, there are various indicators like fuel meter, speedometer. Nowadays, we have a navigation system and few maybe sometime tire pressure, etc. So as many as indicators we have into the maybe car, based on that, it gives us the confidence that okay, how I mean, we feel safe basically, that okay, yes, our journey is going to smooth without any problem. So similarly, these indicators are going to help us to have a smoother trade when we are entering into the stock market. Okay, uh, going further, so there are some brief history about technical analysis. Okay, so when I researched, okay, based on my research, that is started, the technical analysis is not a very new term. Okay, it's a more than 100 years, and the the oldest history we found based on the Google information is someone from Europe, Mr. Joseph. So he adopted early technical analysis to predict the Dutch market in 17th century, and in last 100 years, it's become very popular across the world. So So the technical analysis that what we are going to learn, no matter it is we are looking at the Indian stock or any other stock into the world, the technical analysis learning will be applied. It will be the same. Okay, so it is a kind of a universal concept, not a any localized concept. Uh, so in the modern term, I mean modern days, there are a couple of persons who are known as very very known faces or names are there in the stock market, and the Charles Dow is one of them. So Charles Dow in America, I mean, they on his name there is an index also like a Dow index, and he is known as, I mean, he has given one theory that is called Dow theory, that is also we are going to learn. Okay, and along with that, there are a few more persons. For example, one is the Nicholas. Okay, so he has written a book that is named at How I Made a 2 million in the stock market. Okay, and there are a few, maybe a couple of more people. So I mean, we are not going to go into those details, but these are some high level brief history about the how and where the stock technical analysis is started, right? So so these people, I mean, they combinedly maybe uh, did the research on the chart patterns and given many theories and many indicators. So how they, I mean, as a whole, okay, they have given certain theories, and those theories are later converted into the mathematical calculations, and they are again implemented on the charts, and then nowadays we are directly using those indicators on the chart to perform these analysis, right? So next question is that how we are going to use these technical analysis, right? So the core principle of any kind of technical analysis is that the again it it is going to reflect into the market price. Okay, so all the information available, maybe, okay, so sometimes somebody focus on the balance sheet, somebody focus on how the company's performance is there, how big is the company. So technical analysis, when we look at from the technical analysis perspective, technical analysis don't care about all those too much details. They focuses on, okay, whatever is happening behind the scene, everything will get in reflected into the chart. Okay, so no matter that company is trying to project their uh, profits, maybe trying to force their profit or trying to hide their profit, or any manipulation, so it is practically not possible to do that. I mean, after a while it will reflect into the stock price. And the recent example we know about the Adanis, like there were so many things were there, and when the reality came into the picture, okay, even with before the news came into the common market, the stock prices all already given some signs. So when we learn further, we'll know that, okay, what are the signs that, okay, before it is something is coming, any information news coming to the common public, how we should able to know by looking into the individual chart itself that, okay, something big or something going to happen. Okay, so thus is said, okay, there is no need to know about what is the economic, what is the fundamental, or any new development about the company. Everything is everything will be reflected in the price and the charts. Okay, so other point is, normally technical analysis believe that any price is moving in uptrend direction. uh okay, so uh no matter how upside it moves, uh there will be a certain point of time that it is going to repeat the history, right? Okay, so in between somebody asks a question, okay, what is the difference between stock market and the share market? This is the same term. Okay, same term used for somebody uses stock market, somebody uses share market, but both the terms are same. There is no difference between stock market and share market. Okay, So um, okay, so why that is the history repeats? Because there are certain certain market psychology that works. So typically, I mean, as of now, no, just remember that no matter how strong or how big or how good any company is, there will be some point of time that history is going to repeat. That means the the price will not always keep on going up and up. Okay, there will be certain point of time it will come down also, and that is called the market correction, market correction phase, where stock prices come down. It provides the various opportunity to get a new entries, some opportunities for people to get exit to the market, book their profit, and so on and so forth. All right. And again, once again, any technical analysis has only the two things: chart pattern and the technical indicators, which we are going to learn in future. Um, so few more terms like a chart. When we say that okay, chart patterns. So chart patterns are subjective from the technical analysis, where any technical analyst is trying to identify what are the area of support or resistance. When we say support, means that whenever any stock price is coming down, based on the past historical performance at a certain point of time, it is the price falling will get stopped, and again from there it will take a support and go further. And in the uptrend market, it finds a certain resistance. Resistance means again based on the past performance of that company. The price movement in the upper direction will stop, and again that is the resistance. Means from there there is a possibility that okay, price will come down, and it start falling. So support and resistance, as of now, understand that okay, whenever price is coming down, it takes the support at a certain point of time, and whenever its price is moving up, it gets a it feels the resistance also. Okay, so these are based on this support and resistance. Any price actions get interrupted, basically. Okay, and in these chart patterns has some a psychological factor. So when why we are talking about the psychology is that any price change happening in the any stock price, it is not happening by itself. There are the people like you and me who are trading in the market. Trading means who are selling and buying, and that is how that okay, even we call as a technical analysis perspective from the predicting the future of any stock. But behind that, the psychology of the people is are the driving force. Based on that, the price is getting fluctuated, that is going up or down. Right. So the psychology plays a very high role into the stock market. Okay. There are few examples of the market psychology. For example, that okay, it is called ascending triangle. So these are the many terms I'm using here, and these terms we are going to learn in very detail. But as of now, okay, just to have a basic understanding, I'm just giving you few basics theory behind these terms. So ascending triangle will be one kind of chart pattern. For example, if you look at this example, okay, so price is going up, but there is a certain chart formation that is happening, which is called ascending triangle. I mean the price is going up in a triangular format. Okay, so that is in a simple term called ascending triangle, and which reflects the bullish market. Bullish market is price is going higher and higher. Okay, and after certain point of time, whenever it will feel a resistance, it will price will come down. Okay, and the term is called breakout. Breakout means the okay, the resistance it will fail, but it not be always there. After certain point of time, that's the price is going to break the resistance, and again the price will move further once again. So if you look at here in this example, okay, so this is the area where the stock price felt some resistance and it came down, and after certain point of time it again went up and break broke this resistance and went again higher as compared to this price range, right? Okay. So a few more points are about the technical indicators. So the technical indicators are, based on some statistical formula where the technical analyst, like people like you and me, after learning the technical analysis, are going to apply, those indicators, and based on the price and volume, try to understand that, okay, this price, what will be the next price action, maybe next 1 hour or next 1 day or 1 month, or maybe it could be next 1 year, depending on, what kind of trader or investor we are. There are, okay, few technical indicators which are most common. Okay, that is called moving average. Um, uh, and other indicators are like some complex technical indicators like, MACD, that is called convergence, divergence, RSI, relative strength index, Bollinger Band, Ronchian challenge. So these are the some of the technical, a simple technical indicators, some of the complex technical indicators. And the good part is that, okay, we don't need to learn the mathematics behind that. As behind that, we are just directly going to learn how to use them. Okay. And there are many trading systems that, okay, which are already having these technical indicator in this, inbuilt into their platform. And investing.com or the tradingview.com are the some of the trading, not trading platform, basically the chart platform where we are going to, use them, those platform, to, to perform our technical analysis. Yeah, so sometimes many people ask about, okay, what is the difference between technical analysis and fundamental analysis, right? So these are the two ways based on that a trader or investor, uh, takes the decision. So when it comes to the technical analysis, as we are discussing, it focuses on directly on the price action. Okay, by just looking the chart and the certain indicators, we are going to decide about what to do, either do we to sell it or buy. Okay. However, when it comes to the fundamental analysis, it basically focuses on the companies. I mean, who are the founder of the company? What is the company vision? What company is planning to do in next 5 years, 10 years, or even longer period of time? What is the company's, profit and loss balance it basically. Okay. So whenever somebody is thinking about all these terms, this is called the fundamental analysis. Okay. So for a big investors, who are the, billions and millions of money, when they plan to invest in any company, they look at these factors. Okay, which is not a technical, but the fundamental analysis. Okay, so fundamental analysis is that those factors which I told about, the knowing the people, knowing the, who is the owner of the company and their vision, their business, etc., etc. But when it comes to the technical analysis, as we discussed, it is not going to look upon those things, because knowing the fundamental is, first of all, it takes a lot of time, and even many a times, if you know the fundamental also, you may not able to take the right decision. um, and a good part or the beauty of the technical analysis is, even if some companies are hiding some of the information in their balance sheet, or maybe trying to project themselves in a good way via the news or, market, or any other platform, their reality will get reflected in the chart. Okay, so ideally, no matter you are the long-term investor or the, daily trader, um, in a practical sense, you don't need to know about much about the fundamental analysis. Technical analysis will be enough for you. Uh, However, at the same time, few information about the company is going to help to just to choose the stocks to do the technical analysis. For example, like any companies there who are maybe since 10 or 20 years since, into the market, and doing the good business. Okay, the just high level stuff about the company. For example, any IT company, like a TCS, Infosys, Wipro, Tech Mahindra. So they are called as big companies and the blue chip company basically. At the same time, other company like a Reliance or the Tata, in the pharma company, maybe Reddy's, Sun Pharma. So these are some big companies. Uh, so for them, maybe knowing a high level information about them, that is enough. Okay, it will just help you to select those company for the trading or investing purpose. But ultimately, when to get the entry or exit, technical analysis is going to help. So even you invested in any company for a long period of time, for maybe 5 year or 10 years, then you should be knowing that okay, what is the right time to exit? Because uh, no matter for how long we are investing, ultimately the end goal is to get the profits. And when we will get the profit, when we'll exit from the market. So we are not doing the investment for maybe the next life. We are doing the investment for this life only. So any point of time we will be taking the exit also, right? So considering that, no matter who you are, learning the technical analysis is very important, right? So that you know that okay, even if you invested for the many years, when is the right time to get exit from the market, and maybe whenever the right times will come, you can do the take the re-entry, right? So taking the entry, uh, you know, taking the exit is equally important as taking the entry, and that you are going to technical analysis is going to help you. Okay. So, in summary, overall, in summary, technical analysis is the way which offers you basically the faster investing pace. Okay. And fundamental, maybe generally for the longer decision, but, but my view is that without knowing about the technical analysis, it will be very, very difficult for a long-term investor also to get the decision on when to exit from the market. Right. So I'll just take a pause here. If anybody has any question or uh, wanted to clarify any points that we discussed so far, I would be happy to help you. Any question, please feel free to ask. Okay, so let us move further. If there is no any question. Okay, so yeah, give me a second. So now we are going to talk about few things about uh, the trend. So there in the market, there are primarily a three trend, either uptrend, downtrend, or sideways trend. And the special point here is no trend remains the same forever. So whatever the trend could be, it is going to change after a certain point of time. The time frame could be different from different stocks, but the only one rule is that whatever will be the trend will not be constant or the same. It is going to change. So we are going to get the few example, the few examples about those trends. So so the first one is called uptrending stock or uptrending market. So where, if you see here, I mean, by looking at the chart, okay, it is going now up and up. But how to identify that? Okay, this is the uptrending stock or uptrending market. Okay, so without, I mean, we don't because no, when we will enter into the market, we will not have the future. Based on the past history only, we are going to decide about the uptrending or downtrending market. So the gentleman Charles Dow, he gave a Dow theory. Okay, so as per him, that if any stock is going making a higher high and a higher low, Please listen carefully and I will explain further also. Any stock is making higher high and higher low. So that stock can be considered as a uptrending stock. So what it mean by higher high and the higher low? So if you look at this stock, suppose if you consider this is the one of the low. So and this is the you know another low in the uptrending market. Okay, so higher high means the next high of the stock should be higher than the previous high. That is simple. At the same time, the next low, sorry, next low of the stock should be higher than the previous low. Okay, uh, it may be confusing for some of you who are very new to this stock market and these terms. So I will take maybe extra time to explain once again. So higher high means it is simple, like okay, the new higher should be higher than the previous high. In the higher low means the new low should be higher than the previous low. So if you look at this one, so higher high scale, this high is higher than the previous high, and again this high is the previous higher than the previous high, and so on and so forth. Similarly, if you look at the lows while market is going up, so these are low. Lows means while going up, it is taking rest and coming down. So this is the another low, but if you compare with the previous low, it is at the as compared to the previous low, it is high. Same thing. The next, this is the low in the in the path of uptrending market, but this low is higher than the previous low, and so on and so forth. Okay, so if you find any stock which is making a higher high and a higher low, that stock considered as the uptrending stock. Resistance. We are going to talk about the resistance, Varun. Just give me few more minutes. There is a question about what about the resistance. So we will be discussing more about support and resistance. Many places. At the same time, what is the downtrending stock? So downtrending stock is again the reverse of the uptrending stock. So any stock which is making a lower high and lower low. So lower high means if you look at this is the highest point of this stock. Okay. And if you compare the low, definitely, it will be a lower than the previous one. At the same time, while while this stock is coming down, at the same time, it will be also making some higher. So the in the downtrending market, it is when it is going to making little bit movement up, that up movement should be lower than the previous low. Okay, so if you look at like a higher, this is a higher in terms of the downtrending market. It is lower than the previous high. Same thing, the next high is again lower than the previous high, and so on and so forth. And similarly, this is the lower low, which is uh, lower than the previous low, and same thing is again lower than the previous low. So that when we find such a trend, that is called a downtrending trend, and this trend is given by Charles Dow, and it is called a Dow theory. And this is the another example, one example of the sideways trending stock. So sideways trending stock is any stock which is not making a higher high or lower low. It is basically for example, whatever is highlighted in green, these are the highest point of you know this is stock basically. Okay, so it is going down and it's making high, again went down and making high, and again after some time making high. So there is no fix. Sometime it is higher lower than the previous high, sometime it is higher than the previous high, sorry, lower, maybe higher than the previous low. Okay, so this is there is no clear, it is neither going up nor going down. This is basically the overall market is going into the sideways. Okay, okay, that is why it is called the sideways trending stock. However, as we learned initially, that okay, no matter whatever is the trend is going to change. Okay, sideway may go upside or downside, or the downtrending stock can go upside or vice versa. Okay, so the as part of technical analysis, we are going to learn that okay, at what what are those indicators and how we can identify that okay, when the trend is going to get reverse. So now I will say a few of the examples. Like by looking at these examples, you need to identify that okay, because we learn, right, what is the uptrending stock and downtrending stock. Okay, few more terms that okay, normally people use that okay, the uptrending stock they call as the uh, you know uh, top performer or high performer. In the simple term and a local term, people also call is a ghoda. Ghoda means a horse, right? So uptrending stock or the high performance stock, they also, I mean, local term they use the ghoda, and the downtrending stock, sometimes they also take call as a gadha. Okay, so I mean this is just to share. This is the very commonly used term in the in Hindi for the stock market. I mean, maybe sometime you might be might heard okay, your friends or somebody talking about okay, that stock is Ghoda or this stock is Gada. I stay away from that kind of language. Okay, so again considering this stock, which is the snapshot of a banking stock, please have a look. So what do you think? What kind of stock is this? It is a uptrending stock, that means Ghoda or Gada. I mean, you can unmute yourself and answer, or maybe raise your hand and I can unmute you and you can answer. Okay, anyone wants to try? What kind of stock is this?
Uptrending stock.
Yes, absolutely. It's uptrending stock. Uh, yes, uptrending or Ghoda. This one is uptrending stock at Ghoda. And this is and the snapshot of a pharma stock. What about this?
This is the downtrending.
Yes, absolutely. This is downtrending stock. And there is one more stock. It is some IT stock. So initially it is, I think, price fell down and then it is going to the sideways, neither going down nor going up. So it kind of a sideways. So by looking at this is again a single snapshot of those three stocks. By looking at these examples, if somebody, if you need to take a decision that okay, which stock you are going to invest, okay, what would be your choice for investment purpose?
Option A.
Option A. Good. Anyone else? Maybe if you're not, I mean, if you're not able to unmute yourself or want to reply, you can also leave your answer in the chat box also. What could be your option for the investment? Maybe I'll give you 30 seconds to reply, or maybe you want to unmute and speak. Please do that. So A, which is the uptrending stock as per this chart, B is the downtrending, and C is kind of a sideways. So somebody is saying option A, somebody is A and C. Okay, so depending on the sorry,
C.
C. Okay, so you are going to invest in C. Somebody is saying that if I'm a short selling, I will go for Gadha downtrending. Well, definitely. Okay, so again, see we again here this is just an example, right? So depending on who you are or what type of trader or investor you are going to select the stock. Okay. Now let us look at the other, some more information about these charts, right? So for example, option A was a banking stock on April 1st, 2017. The share price was 350 per share. Okay. So somebody who has invested or who choose to invest in this banking stock look at the same banking stock after some time. Okay, sorry, there is a um, error. I think it was a 2020. So the same banking stock, which is trending 350 per share in 2017, by 2020, the price went down to 13 rupees. So that means if anybody invested 1 lakh, that 1 lakh in 2 years, rather than appreciating, it just left 3.7 thousand, less than 1 lakh will become 4,000. Another example, that okay, the pharma stock. So pharma stock price was 5,100 per share, 2020, or in May 2020. Okay, the same pharma is okay. So whoever, like in the same, somebody I think choose the B, okay, but as a short seller. Nobody I think choose this stock as an investment purpose. But that pharma stock went up, okay, and the investment of 1 lakh in just 2 years become 2.5 lakhs. And the third example of the IT stock, okay, which I think very, I mean, if somebody chose in the bear market means the short seller. But if you do the short selling here, okay, but the result was, I mean, it went up after a certain point of time. Okay, and this stock was a Tanla solution. Even I myself invested that point of time. I took entry somewhere here and executed just before this, uh, before the red candle, that point of time. So the investment of 1 lakh, it became 5 lakh in just 2 years. Okay, so how this happens? See, because if we don't have the I don't know, needed or required knowledge about the technical analysis, it will be difficult for us to take the right decision. Right. So these are the just a few examples we discussed here, that okay, I mean, limited knowledge, or the it will maybe lead you in a very risky situation, or I can say that okay, the sometime half knowledge is more riskier than not having a knowledge. And similarly, these things, I mean, these are the three examples through which I hope maybe you got some idea. Okay, so depending on certain information, we all selected different stock. But when we came to know about the reality, maybe maybe for some of you it might have given the desired result. However, many of the decisions, as per today's example, we took a maybe a incorrect decision.
How much
uh,
did 1 lakh become after 3 years for option A?
Option A. So
Yeah.
of option A, 1 lakh become less than 4,000, 3.7K. This was the
So
example of S Bank.
that's an upward trend that we
Oh,
saw in
sorry,
the
it was one sec. Correct. So upward trend was there till this till this price. The example I showed till somewhere till 17 or so.
okay.
Okay, so I was not provided, because
Okay.
somebody invested here in S Bank by looking at the uptrending market. Okay, and after that, if you are not execute from the market at the right point of time, and he or she left his money for 2 years, that 1 lakh resulted just to 3.7K, because after that the market start falling for the S Bank.
Correct. I got it.
Okay, great. So there's another great example which I found. Okay, so somewhere in I think 2005, I think this is the approx value or the cost of the Royal Enfield 350. Okay, maybe please correct me if I'm wrong, but I think this was the price, maybe 50,000 or 60,000, maybe. This is just an example, but I'm very close to this price. So suppose anybody in 2005 maybe purchase a Royal Enfield, okay, and maybe enjoy the life. But suppose that rather than purchasing, just example, rather than purchasing a Royal Enfield, if somebody could have invested that amount into the same company which is producing Royal Enfield, that is Eicher Motors. So maybe after some time, maybe recently, I think this is a little old chart, but the recent price, the Royal Eicher Motors stock price around 3,900 approximately. Okay, so this is the potential, right? Rather than, I mean, if that person, rather than investing in the motorcycle, if he could have invested in the stock market, maybe after how many, maybe I know this is a long years, 18, 20 years, maybe he could have got the return of 92 lakhs. Okay, maybe he could have purchased the car and maybe small flat. So this is the, I mean, this is example I'm just giving. What is the potential of the stock market? And this is the very long-term investment. I will give you the another very classic example of the short-term investment. Okay, and that is the in the commodity market. Commodity means especially the precious metal like silver and gold. So this was the time during the COVID, when COVID hit. Most of the stock market stocks went down, but the commodity market, especially the silver, gold, these prices shoot up very high. So suppose if somebody did investment of 20 lakhs here. So 20 lakhs here, I mean, again, you need to do the short selling. Okay, somebody, I think someone was very much interested in short selling. So if anybody could have invested maybe around 20 lakhs here, so just after 8 months or within the 8 months, that 20 lakhs could have become, around 43 lakhs profit, not the value. So 43 lakhs plus 20 lakhs. I mean, it is overall result is 63 lakhs. The profit is 43 lakhs. So again, here, um, so here you are not purchasing it, but we are doing the short selling, and which is very much possible in the stock market. So somebody who are new to the stock market, yesterday I also mentioned, today again repeating. So stock market, it is very much possible that even if you don't hold the stock, you can sell the stock and first and purchase it later. So if you, for example, if the market is bullish, okay, so you can first purchase it. For example, Reliance, old example, Reliance, maybe share price is 1,000 rupees and you purchase it here, and you predicted that okay, market is bullish, and after few months or a year, when the Reliance price is going up, for example 1,500 or so, you can exit and get the profit of 500 rupees per share. So depending on how much money you have invested. For example, if you have invested 1 lakh rupees, 100 shares, then once you sell it at 1,500, you will get a 50,000 of profit. And similarly, in the downtrending market or the bearish market or the falling market, you can sell the stock first, okay, and then purchases later. So it will be a negative listing in your account, and when you purchase it later, it will become a zero, and whatever will be the price, because you are selling at a high price and buying at a low price, whatever will be the difference, that will be your profit. Okay, so these are the, I mean, few more terms I wanted to capture, I wanted to show to you today. Okay, there are maybe few more terms that we will be covering, for example, before completing, or maybe before going further to detailed analysis. That will be leverage. Leverage means, maybe I can give you some example of leveraging. Let's take example of USD INR. Okay, so what happens in the stock market is, when we talk about the leverage. So leverage means, suppose price of a stock is let's say 100 rupees. Okay, so if you are purchasing that stock into the cash market, so for to purchase one stock, you need to pay full 100 rupees. And if you want to purchase maybe a 1,000 stock, you need to pay 1,000 into 100. That means at least 1 lakh rupees. But there is a option, I mean, there is a way available which is called option in the stock market, where you get leverage. Leverage means how it works. It is like uh, let's say you are purchasing a plot, okay, planning to purchase a plot. So, and plot is costing around maybe say 1 crore. Okay. So, but you are not paying 1 crore to the, to the seller or the broker. You might be paying maybe a 5 lakhs or maybe 10 lakh and holding that plot on your name. Okay. This plot will be booked on your name, but there will be a time limit. Maybe in next 3 months or 4 months, you need to arrange the rest of the 90 lakhs and the plot will be yours. Okay. But maybe once you hold the plot by paying 5 lakhs or 10 lakhs, suppose, and you able to find out by yourself another buyer who is ready to pay maybe 1 crore 20 lakhs for the same plot, right? So you don't need, okay, so you can sell the plot, I mean, sell the plot to the new buyer and ask your, the seller to do the registry. But whatever the profit is coming, so only the 10 lakh rupees is the, in the market. Okay. But with the 10 lakh rupees, you are holding the plot worth of 1 crore. And that 1 crore of plot, now you are selling to the another third person in 1 crore 20 lakhs. Okay. So, and whatever the price difference, because the original seller, you need to pay just, over total 1 crore. So remaining 90 lakhs you will pay, and 10 lakh you have already paid. So 1 crore will be paid, but you are getting 1 crore 20 lakhs from the third person. So that means 20 lakhs will be your profit, right? So just by investing 10 lakh rupees 4 months, you are getting a profit of 20 lakhs. So similar thing also happens in the stock market, right? But only thing is you need to purchase those things in the bulk, and that is called the option trade, futures trading. So in the futures trading, it won't be available one or two stock. You need to buy the stock in the bulk, and that is decided by the stock, I mean, exchange, right? I mean, we cannot decide. So it will be that is called lot. So for example, one maybe let's say Infosys share, maybe you need to have at least I think as of now, a lot number is 150 or 300. So for 300, you need to pay. But again, the payment you don't need to make complete payment for 300. It will be, you need to make a certain percent, maybe around 20 or 30%. Right. So that is called leverage in the stock market. So similarly, huge leverage happen in the instrument called USD INR. Okay, these stocks are also called, sometimes people say script, sometimes they also say instrument. So stocks, share, instrument, script, all are the same thing, right? So these are like USD INR is the another area where uh, with the help of a small investment, maybe by investing maybe the 10,000, maybe 10,000 or 20,000 rupees also, you can hold the big amount of those foreign currencies, except the US dollar, and then you can sell it also. So similarly, that we are doing in the example of that land purchase and sell, same thing is also happening. So you are using the concept of leverage. So each and every that is, I mean, this is decided by the exchange, and your broker provides that leverage facility to you. Okay. So by investing maybe the 10,000 rupees, you may purchase a dollar of worth value, maybe 1 lakh rupees, right? So when the maybe a couple of paise also, that dollar price appreciate, when you sell it, whatever will be the the profit, it will be yours. So maybe the dollar price increased by 10 paisa, and you have purchased 1 lakh. Okay. So 1 lakh 1 lakh, I mean, 1 lakh of worth of dollar. So whatever the appreciation, maybe it will be 10,000 or 15,000, it will be your profit, right? So by just investing 10,000 rupees against purchase of maybe US dollar, you should be able to get a good amount of profit, right? So I mean, leverage is again the possible into the stock market, right? So there are few more examples. I mean, leverage again. We will cover all these points in a very detail when we are learning the tech analysis, and when we get into open work with the trading account, how to how this leverage works. But I'm just giving you a very high level idea at this point of time, just to understand okay how the leverage concept in the stock market works. Right. So yeah, I think we have consumed the time today. It's already 10:33. So if anybody has any question based on the points that we have discussed, please feel free to ask. Any question? Anyone?